Hey guys, how's it going? So in today's video I'm going to be talking about how much money I lost off Medmen. That's right, I lost a total of, okay, so this is at least $30,000. You see this one right here that says 10,000 shares. In the morning, during the day, I sold off my Medmen shares at $4.13 or 12 cents. I can't exactly remember. And then I rebought it back into the stock at $4.11. And some strange reason, my average price cost did not go down. It actually made me cause me to average down at, so it was kind of weird because, I'm assuming if you sell your stock and then you rebuy it, the price should gone down. Before I did it, I double checked because these shares amount right here is under my RSP retirement saving plans, and I double checked if I can sell it and then rebuy it. So I could, and I sold it, and then I was gonna rebuy it and re-enter back into position. At the end of the day, I felt uncomfortable because I was at 86,000 shares, so I bought an extra additional 10,000, which gives me about 96,000. I really think that around 410 is a really good price point. But at the end of the day, it still could drop down further. I actually would want it to drop down further. I don't want to gamble it dropping down further. Maybe I should have gambled. I would have probably made more money, but yeah. So this is a messed up. Hopefully it gets fixed on Monday. If not, I just have to remember that it's actually priced at $4.11, not $4.35. So yeah. So moving forward, the main reason why Medmen was so suppressed today was this article from CNBC. The one company that's promoting Medmen is gone on the other side and has, made a bearish article on Medmen, causing Medmen stock to be volatile, causing it to go down. But you know what? I honestly believe that this is an opportunity because, let's be honest, every cannabis retail store is losing a lot of money. Let's look at their finances. As you can see, they have a total asset of $466 million, a lot of goodwill and intangible assets. So these two can be completely, I don't know, I guess they don't mean anything. These are fluff. That's like more than $200 million of fluff, $220 million of fluff, giving them a total shareholder equity, total asset of $266 million. And then they have a total liability of $174 million. So their total balance sheet does not look that good. I do agree with that, but they do have. They have one of the highest revenues in the industry. On top of that, they have really good gross margin. They do, however, have a lot of general and administration expenses. This is something they really need to control. They've grown their company quite a bit. Like, the company's grown 10 times in revenue since, last year, December 31st, 2017. They only made $3 million. Now they're making $29 million. They 100% their money in 1 year. They 10 times their revenue in 1 year, and they also increased their gross profits by quite a bit. This was, I think, 25%. This one right here is over 55 or 56%. So the gross margin has improved, but the general administration, they need to hire less people. They need to really work on that because, if you look at the investor presentation, they have a total of 1,100 employees. Each employee has health benefits, all the employees, this was, I don't think this is going to cost the company too much. 100% employees receive stock option. All the employees are unionized. That's very expensive too. And they bring they put all the workers through 10 hours of training, monthly training. That's gonna be costly because you're gonna have to have somebody there to train these employees, and you gotta pay those guys and those employees. You know, they take 10 hours from their work time to, you know, re-educate themselves. Yes, I mean, it's good to have to have employees work hard, but I mean, employees to be very knowledgeable, but it's expensive. They need to learn how to cut back expenses. Also, when I was in Vegas, I noticed that they had way more employees than Planet 13. I went to the store. The store was completely dead at the time I went in. There was nobody besides me and my friends, and there was like at least 10 employees in the store, and there's like no customers. At least the Vegas location that I visited. So, and then when I went to Planet 13, there was like nowhere as many employees as Medmen has, because, you know, Medmen has a lot of employees and they pay them well. And then the CEO and the CFO are the two co-founders of the company, Andrew Morden and Adam Bimar. These guys, they don't have any experience in the public markets, and on top of that, they also were kind of greedy and gave themselves fat wages and lots of benefits. So, you know, but, you know, they could reduce the amount of wages they get, but, you know, that's a concern moving forward. But, you know, ever since they started the company, they've added very good talent to the team. Two guys from Apple. They came from Apple. You know, these guys, you know, all these experience, Visa, you know, eBay, Guess, Lucky Brand. So yeah, they hired some really talented people onto their board, but these two do not have that much experience. They just started up Medmen, and they're kind of reaping the benefits of it. Adam Bimar, man, I guess he does have a talent. He's really good on he's really good at presenting his company. He goes out and he talks about his company, and he's a good talker, and, you know, he seems like he's a smart person. But yeah, the fact that these two are greedy is not a good sign. But, you know, it could change in the future. They could reduce their wages and reduce the general and administration. That part of their wages are in that general administration. You know, they could lower everyone's wages and try to be more efficient, so at least they don't lose tons of money every single quarter. So yeah, the reason why the stock was down today was because of that big news. I honestly think that 410 was not a bad price to get in at, but that's just my opinion. The best price would be $3.59. So if the stock price drops another 50 cents, I would be down like another $20,000. I would, you know, so I would be losing about $50,000 or $60,000, $70,000 if it dropped down to $3.59. That wouldn't feel too good, but, you know, and everybody who else buys is gonna make a ton of money now. Gonna make a ton of money if they do truly believe in Medmen long term. I mean, there is some risk in the company, but every single cannabis company has risk. Aurora was way riskier when I invested into when it was $2 than Medmen, in my opinion. You know, even though the price was down, at least the volume was pretty decent. We were trading at 1.7 million shares today. That's pretty decent volume compared to yesterday. Anyways, yesterday was only like, you know, 785,000, almost less than a million. Today is like 1.6, like double the volume from yesterday. So volume, at least you know, there's a lot of investor interest, and this seems to be have a strong support level around $4.10. And then I was looking at the Medmen announced $250 million investment from Gotham Green Partners. You know, under here it says that, you know, the first $100 million, hold on. So the first tranche of notes will be, when it gets converted, it will be converted at $3.10 US. You know, eventually it will get converted, and then the other two will be converted at $7 US. And then let's say if the stock was above $8 US for 20 consecutive days, Medmen could convert 75% of the outstanding notes, and so they will have more shares, but at least no, they don't owe that money because it's all converted into shares. You know, as you can see, $3.10. Medmen is trading at $3.07 US. So right now it's already under the value where these guys are getting their investment money from. So anything way below $3.10, in my opinion, I'm not a financial advisor, the company could somehow go bankrupt. You know, the management can, you know, mess up and, you know, don't know how to control the expenses and bankrupt the company. That is a possible scenario in the future. So I don't want you guys to be like coming in thinking that this is 100% sure bet, because nope, there is certainly some risk in it, but I don't believe that will happen. I believe that worst case scenario, they always can manage to raise more money. At least that's just my opinion. Medmen is one of the fastest growing companies in the United States right now. The only problem is they have way too many expenses. You know, 10 times your revenue in 1 year is really good in my opinion. So yeah, that's all about I want to talk about Medmen. Now I'm going to talk about Aurora. Aurora, I think, is way more dangerous than Medmen. Investing into Aurora now, I think, is extremely risky at this price, because I think Aurora could drop down to 66, you know, below $7. That's almost like almost a 50% loss compared to Medmen. So Medmen could drop to $3.65, but Aurora can also drop down to $6.50. I'm taking huge amount of risk just holding on to my shares long term, but at the end of the day, you know, I'm not taking risk holding long term, but I'm definitely taking risk short term holding into my Aurora stock. Long term, I think Aurora will be a $20 company once they get a deal. But what do you say? Like, you can't say that Medmen in the future won't get bought out by a bigger company. If Aurora or Canopy or some other big company has the ability to be bought out, why can't a Medmen be bought out by a US company or another big company once the US becomes very legal? I totally see that as a possibility. So I mean, Aurora bought out Metroleaf for $3 billion Canadian dollars. Medmen is only $2 billion Canadian dollars, and you know, everything that Metroleaf knows, Medmen knows. On top of that, Medmen built its own retail stores, and they are more focused on branding than Metroleaf. So I don't know, it's just, to me, Medmen is a better company than Metroleaf. Some people could argue and tell me that Metroleaf's a better company. Aurora got away with a steal. Metroleaf will always be better than Medmen. I don't really think so. I don't think Metroleaf is better than Medmen. Just my opinion. So, you know, Medmen has 800,000 square feet of cultivation. When Aurora bought out Metroleaf, they only had like 300,000 square feet, or not even 250, a 250,000 square feet of cultivation. They had a greenhouse that Aurora's not even touching at the moment. They may convert it into Aurora Sky, but you know, just saying. Aurora, very weak. Today the stock went up on very weak volume. Not a good sign in my opinion. I think Kira is even riskier than Medmen. Like Kira, the valuation has gone double from ever since it IPO'd. It fell to like $5.85, skyrocketed all the way to $13. What is like there's a chance that the stock could go back down to $6, $5.85 in the future. That's a total possibility. People are saying no, Kira will stay at $12.20 forever or go higher. I don't think so. I think eventually, Kira will fall back. Just my opinion. I think, let's say if I took all my money and I invested in Kira at $12.20, I think that would be a way riskier investment than Medmen right now. Just my opinion, because Kira ran and Medmen hasn't. Medmen is just getting a lot of pressure from negative articles. So this is my 2 cents on it. I don't know why I haven't it. So right now the market's officially closed. Canopy's down 2 cents. Aurora is down 1 penny, I think. Yep, still down 1 penny. Canopy chart looks, very bearish. Death cross. Don't think that's gonna revert itself. It could revert. This could be like a fake out. Canopy could somehow come out with amazing news. Like, I don't know. Think of something that would cause this to reverse. Some kind of big news. I can't think of a big news. They acquire some hemp company in Europe or something. I don't know. Another US hemp play, maybe. Another US company they acquired. Another hemp US company, maybe. I don't know. But to me, I think it's just going to slowly trade down and down. Because Aurora, Canopy will not trade above $46 because that's where the 50-day moving average is, and it's in a negative territory. It might bounce close to there and then it's gonna fall back, but that's what I think. I don't know. Comment down below, tell me that Canopy is way safer than Medmen, and I will be making tons of money off Canopy long term. But first I would lose a lot of money, then I would make a lot of money. Or I would lose money and then make my money back and then make some money in the future when it goes to $80 or $60 eventually, hopefully, one day in the future. You can't go wrong with Canopy. You can only lose money short term with Canopy, right? Or maybe even possibly not lose money on Canopy short term. I have no idea. How about Canopy Rivers? Is Canopy Rivers safer than Medmen? Probably. But is it gonna fall further than Medmen? I have no idea, but it's $3.76. It's to me, Canopy Rivers is a safe company, but Canopy Rivers has been down to $2.50 before. So is Medmen safer than Canopy Rivers? No, I'd say Canopy Rivers is safer than Medmen long term, because I don't think Canopy River will bankrupt. So the lower Canopy River goes, the better buying opportunity it is, in my opinion only, not an advice to buy. So there's a lot of companies out there. I don't have to put my money in Medmen. I could just be camping Canopy Rivers, and hopefully one day, I think Canopy Rivers is a good business. I honestly do believe that, but it's downtrending and it's not safe to buy. So and it's cheaper than Medmen big time. It's like 1/4 of the price. It's only $580 million market cap. Actually, I think it's more than that. I'm not 100% sure. Never mind. Oh shit. Okay. Anyways, I think that's it for my video. Thanks for watching, guys. I hope you enjoyed this video. Give me a thumbs up, it helps my channel grow. Subscribe for future updates, and have a great day. Bye.